Today is April 24, 2:35 p.m. We detected some unusual options on Merck. MRK is the ticker. Some of our subscribers were asking about it, so we thought we'd do a quick analysis on this. Earnings is coming up, so keep that in mind. That is on, I believe, on April 27 before market. And one thing to keep in mind is we are near the overbought on the RSI technical indicator, and we are on a yearly high since April 17. It hit the 116 mark, and we are also very low on volatility, you'll see here. So we will also suggest a trade that takes advantage of this very low volatility and potential pullback. So without further ado, let's get right to those unusual options. At 12:51 p.m., you'll see here, there were these 1,500 July 21 strikes. And you'll see that the market was trading at 122 to 129. It was executed at 129. We believe this was a purchase of 105 strike puts. It is a lower probability because it is at the 17 delta. However, since the stock has been quite on a trend going up and it is near overbought, there is a potential. However, there is that earnings, so it could surprise us. This was the 105 strikes here. You'll see that 1,500 contracts here. That is greater than the open interest, so these are open orders, and so this is quite bearish. It could also be a hedge on a large institution that owns some stock on Merck, so we don't necessarily know that. And so what we did instead was that we sold this strike here instead of buying it. And then what we did was we bought the January 2024, 270 days away. We bought that same strike here at 105s here. And so keep in mind, this is a longer dated trade, all the way to July is the and so this is actually a calendar spread. This takes advantage of the very low volatility because you'll see here from the Greeks, our Vega is quite high at 17. So once the volatility increases, this trade will be beneficial. It is a negative delta. We are expecting a pullback down towards, well, we're not sure how low it'll go, but we will start tracking this stock and cut our losses if it continues to rally towards this direction and the price increases. Then we will probably cut our losses on this. It will be minimal loss. You'll see here as it goes up. If it goes up to even 120 and breaks, or 117, let's say, because that will break the high, it's only a $14 loss, right? It's very minimal, but we will keep to this discipline because we put on this trade with the idea that it will go down, and if that idea is broken with a new high here going to, let's say, 117, then the original reason why we put on this trade has been violated, so we will just cut that trade off as soon as possible. That's what being a good disciplined trader is about, is that you take off your trades whenever the original reason why you put it on has been violated. So earnings is coming up. There is that uncertainty, so keep that in mind. So we're going to just keep this long-term trade on because it is low risk and it has a positive theta, so there's no loss for just staying on the trade unless it really rallies. But given that it has already rallied quite a bit, there's a lower chance that it will continue to rally, and instead it should pull back at some point. So we will see. We have actually quite a lot of time, since the July date is 88 days away. Okay, so that is our analysis on Merck before this earnings.